Welcome, and thank you for joining us today to learn about the final 2020 Form W-4. My name is Rachel Yanchis, and I'm a Senior Marketing Specialist at Exempt. We're excited to have our Consulting Director of Compliance Services, Yonina Shineweather, CPA, and our Manager of Tax and Compliance Services, Malka Trump, CPA, CPP, this afternoon as they discuss critical changes to your federal tax withholding for next year. Before I hand this over to Yonina, I want you to know that we value your feedback from this session, and we look forward to sharing with you more insights that will help you successfully grow your business. We'll be recording this session, and a link with the recording will be posted on the webinars section of our website. To learn more about Viventium and our payroll and HR services, check out www.viventium.com. Yonina, we're looking forward to this session, and I'll hand it over to you to get started.
Thank you so much, Rachel, and welcome everyone to this afternoon's webinar, Federal Tax Withholding in 2020, How to Prepare. Today's webinar is going to talk about perhaps one of the most significant changes in the history of payroll, at least in the past 20 years. In all of my 29 years in the payroll industry, I can't say that I've ever seen such a sweeping and such a pervasive change that has really affected every employee of every employer in every industry and in every state. Meaning we've had like big changes like ACA, but even the Affordable Care Act only affected applicable large employers, only affected full-time employees. We have this year's overtime rule change was a final rule, and we presented some Viventium webinars about that. There's going to be another one coming up as well. But again, that only affected certain states, and if the threshold was lower, and it only affected certain groups of employees if they fell within a certain salary range. So there have been changes. There have been big changes, but I don't think anything that has been so all-pervasive has happened to us in recorded payroll history. And before I get started, we're going to be very hands-on today. We're going to be taking a very detailed look at the form, what your role as an employer is in terms, because really this is the W-4 is an employee and an employer form. It's a form that's completed by the employee and then given to you as the employer to figure out how much tax to withhold and to remit on behalf of the employee. So what's your part in the form? How far does your advisory role go to your employees? How much advice should you be giving them? How much hand-holding should you be doing? Where might you be overstepping the borders and the boundaries and, going into the tax advisory position, which you don't want to do? We're also I'm going to be giving you some tips throughout, some best practice tips in terms of how to approach implementing this change. So before we jump in, just a couple of administrative points. First of all, today's session is being recorded and the webinar will be available on the Viventium webinar site. There are also two handouts, if you'll take a look on your handout toolbar. First of all, the slides themselves are going to be provided. They're there as a handout. So if there's any information, you don't have to necessarily be taking it down. You're going to get the slides. And secondly, there's a bonus here called the W-4 Payroll Stuffer. And this is a Viventium branded and developed, easy to understand explanation that you may want to consider providing to your employees as a payroll stuffer in order to help them transition into the new 2020 taxes. And lastly, I want to make a note, and I see some of you have already noticed it, you do have a question toolbar. And I do keep my eye on the questions as I go along. I try to work the answers into the presentation, and we will try to allow time for question and answers at the end. And what I always like to say before I begin a webinar, if there's a question that's in your mind as I'm presenting and explaining, then it's probably a question that other people have as well. So you'll be doing a favor to everyone by asking the question. So please do go ahead and feel free to use the toolbar. I just want to address one of the questions that was already asked, if CPE credit will be offered for this webinar. And the answer is no. We actually had hosted a CPA-based webinar for which CPE credit was offered. This webinar is geared more toward the employer community. Of course, CPAs are welcome to join as well. but the CPE credits are not, and also the CPP credits are not being offered for this webinar, just to answer a couple questions that were asked. Okay, let's get started. So where did this all come from? Where did all these changes start? Let's go take a look at the legislative background. It all started back at the end of 2017, about 2 years ago, in the Tax Cuts and Jobs Act that was passed and signed into law. And one of the many, many provisions of that Tax Reform Act was a desire to stimulate the economy by putting more money in the hands of employees on an ongoing prospective basis. So the way our pay-as-you-go tax system works, of course, is that employees pay into the system through withholding. And as time goes by, the year comes to an end, they file their tax returns, and they're usually overpaid the way that the old withholding system was working, and then they would get a refund around February, March, April, whenever they would file their forms. And the idea behind the TCJA goal here was, instead of having people getting mostly over withheld and getting these refunds only in the following year, let's decrease the withholding. Let's make it more accurate. Let's make it more accurately reflect what the actual liability is going to be, and we'll decrease those refunds in, come tax time of the following year. But meanwhile, we'll be increasing net pay, and we will be giving taxpayers their money up front, putting more money in their pockets, and thereby stimulating the economy. That was basic logic, and it makes a lot of sense behind changing the tax withholding system. Of course, the employer community had a number of associated concerns that came about as a result of the way this desire and this, very admirable desire was going to be implemented. First of all, what does it mean, let's get more accurate withholding? What does that mean exactly? It means that we need to increase the complexity of the tax withholding system. We need to start collecting more information from employers and employees. Employers need to get more information. Therefore, they're going to be decreasing the privacy of their employees' financial information. Employees are going to be asked to disclose more, to tell their employers more about their own personal financial situations, almost as though the W-4 would be a mini tax form, a miniature 1040, and that's really what this new W-4 is starting to look like. It's starting to look like a miniature tax form. And of course, that will also increase employer burden, because employers now have to process additional data elements that the employees are disclosing to them. The employer's payroll systems, software, their outsourcing providers, their payroll partners, all need to be modified in order to accommodate all of this additional information. So, why are we only looking at changes in 2020 if this legislation was passed in 2017? The answer is, first of all, 2017, since the law was signed in December, there was no time at all to implement anything for 2018. The IRS would not have had time on a dime to turn around and, revamp everything. During 2018, last year, the IRS really intended to implement this new withholding system for 2019, and they really tried valiantly, but they realized that it was just too big a job and too many changes, and so at one point during 2018, they announced that they were postponing, they were delaying the changes. The 2019 W-4 and withholding would all stay the same, but at the beginning of 2019, they really did their due diligence. They threw themselves into it. They did all kinds of surveys, and they even invited many payroll service providers, many members of the employment community to participate. And we did, on behalf of the Event team, we participated in a think tank study that the IRS privately contracted out to, and they collected feedback on various early drafts. And it was an honor to participate in that and have an opportunity to contribute. And I really want to, give the IRS credit for doing a yeoman's job of listening to the employment community, hearing our concerns. They issued two different drafts of the form in the course of 2019, which the Event team has been updating you about. And they really listened, they really changed, and now they've released the final form. And so it is happening. It's not being delayed anymore. It is happening, and it's happening during 2020 as of January 1st. However, even though the W-4 wasn't changed in 2019, there are some important points that you would want to be making your employees aware of for 2019, for this year right now. Even though the W-4 wasn't revised, but the tax system still was. As you know, as you've seen from, I'm sure, your 2018 personal tax returns, there are no longer any dependent allowances, withholding exempt. They're no longer, there used to be you would claim a standard deduction on your tax return, and then your number of dependents you would multiply by a certain amount to get an additional reduction. But that didn't exist anymore on the tax return, not in 2018, not in 2019. On your withholding, however, on your W-4 for 2018 and 2019, it was still asking the number of allowances. So there was a little bit of disparity between the way the withholding was happening and the actual tax return that you're filing at year end. And therefore, in order to help your employees avoid surprises at tax time, avoid overpayments, that wouldn't be so bad, but especially to avoid underpayments with the balance due and estimated tax penalties, employees are encouraged, and the IRS encourages employers to encourage their employees to do what they call a paycheck checkup, just to see that you have the right amount of tax being withheld in your own personal tax situation. And it's not too late, even now at the end of 2019, to encourage employees to do this checkup. And therefore, if they see that they're under withheld, they can still go ahead in the last payroll or two of the year and ask for additional tax withholding and avoid estimated tax payment penalties. How can they do a payroll tax checkup? Well, up here on the right-hand corner, I've given you the link to what the IRS calls its estimator. They used to call it a tax calculator. Now they call it an estimator. They've also revamped the estimator to make it a little more user-friendly. It's a little bit simpler to use now. There's also a frequently asked questions that you can direct your employees to. So I recommend that you do maybe put a stub message if you're able to do that, and the Viventium clients are able to do that. Put a little reminder on the stub to your employees saying, encouraged to do a paycheck checkup before the end of 2019 to see if there's any additional amounts that you want to have withheld. Which employees are most likely to need this paycheck checkup? The IRS has given us a list. They've said any family that's a two-income family, or people who themselves have more than one job simultaneously, or if they've only worked part of the year, people claiming the child tax credit, or with older dependents, people who have itemized their deductions last year, who have high incomes and more complex returns, and finally, people that have gotten large tax refunds last year and have gotten a lot of money back. They're advised to do a paycheck checkup to see that their withholding is as accurate as possible for 2019. And that's it for 2019. Question is, what about 2020? And this is where we're really going to get into the meat and potatoes to discuss what changes are happening for 2020. Just to answer a question that came in, what if you already issued the last paycheck of the year, and your employee then does a paycheck checkup and realizes that they need an adjustment? So it's not too late. You can still run an adjustment payroll. And especially those of you who are clients with Viventium have that flexibility. You can do an unscheduled payroll and allow your employees the chance to fix their withholding. However, that's a business decision that you as the employer need to make. You're not obligated to do that. This has been the employee's responsibility all along. It remains the employee's responsibility. You're just doing them a favor by reminding them about that. So in 2020, things are changing drastically as of January 1st. Take a look at what you see in front of you, the 2020 percentage method tables, the way of calculating taxes. And as you see now, we now have two different sets of tables. There used to be just one set of federal tables. On the left side are the tables that you use if your employee did not submit a new W-4. And on the right-hand side are tables that you used if your employee did submit a new W-4. You also use the left tables if they did submit a new 2020 but they did not check this magic box, which we're going to see soon in step 2. We're going to look at what that magic box is. So a 2020 W-4 where the magic box is not checked uses one set of tables. 2020 W-4 with the magic box checked uses the other set of tables. Now, a best practice tip. Check with your payroll outsourcing partner to see if they are ready to implement the 2 types of withholding tables. And if they're not, when within the next couple weeks is their target date. And if they can already begin to show you screen mock-ups, even if they haven't implemented it yet, so that you can begin to train your staff and adjust your internal processes for the new information collection that you're going to need to do. Now, those of you who are Viventium clients, Viventium is completely ready. You'll see it live in Viventium in the software. And part of what we're going to look at the end of the webinar today, my associate Malka will be showing you the screens and how to map all these new fields in the W-4 that we're going to see shortly into Viventium later on in the webinar today. So not only have the withholding rates changed and the fact that there's now 2 different methods of withholding, but the form itself has changed drastically, starting from its very name. You see what it's called now? The Employees Withholding Certificate. Compare that to the 2019 form. It was called the Employees Withholding Allowance Certificate. The word allowance is gone. Allowance is now a bad word for federal payroll tax. There is no such thing, almost, as allowances anymore. And I'll tell you what that almost is about in a minute. We used to be, married 3, single 4, whatever the case might be with a number of exemptions. Well, there's still marital status or filing status. However, there is no longer a place on the W-4, just like there's no longer a place on your Form 1040, to claim dependent exemptions. The idea of dependent allowances or withholding allowances is passé. It's gone. It's not there anymore. Out with the old and in with the new. This is the Employees Withholding Certificate, and as you see, it asks for marital statuses in step 1, but nowhere on the form does it ask for your number of withholding allowances. A whole new world that we're talking about now. Let's take a compare and contrast. Here's your 2019, here's your 2020 on the right-hand side. First of all, obviously, the first thing we see is the 2020 is significantly longer, right? It's that mini tax return that I referred to before. Significantly increased amount of information that's being collected. We have steps 2, 3, and 4. And after we finish contrasting, we're going to zoom in only on the 2020 form, and I'm going to step you through each of the steps, and we're going to really, make sure that we understand them. But first, let's just do a bird's eye view. If you take a look at the W-4 on the left-hand side, the 2019, so the beginning collected your name, your first name, last name, your social security number. Okay, that information is still up there. They took out the word your. It's just now first name, last name, social security number. They revised the little social security withholding information. In 2019, they only asked employees to check if their last name differed from the name shown on their card. And as you see on the 2020 form, they're asking employees to verify their entire name. They took out last. And this is reflective of the Social Security Administration's more proactive efforts to reduce the suspense account, to make sure that there are less name social security number mismatches and that employees are actually getting credited for the wages that they earn. They've also taken out that little checkbox. I guess they decided it was kind of, almost unnecessary. Check here if your name doesn't match. No one's really going to. They're just telling employees if your name doesn't match, do go to your office, your local SSA office, or call up the Social Security Administration and take care of this, of this problem. Now, the question came in, and I'm glad it was asked because it was something I wanted to discuss. Should every existing employee fill out a new W-4 in 2020? Well, let me revise the question. Must every existing employee fill out a new W-4 in 2020? The answer is a resounding no. Employees are not obligated to submit new forms. That was an early consideration of the IRS. They had thought about doing that. Some employers would have even liked the IRS to do that so that you didn't have to have two sets of withholding systems. Might have been simpler to say, okay, that's it. Everybody has to fill out a new W-4 and we're just going to use the new tables. But I think the IRS decided that doing that to the entire employment community of the United States of America would just be too overwhelming, everybody having to give in new forms. So they nixed that early on in their process. And they came out and they said, no, an existing ongoing employee does not need to submit a new form. There are two categories of workers who need to submit new forms. Category number one is any new hire who was hired starting January 1st, 2020 or later. They must use a 2020 form. And note, even if you're going to onboard them in 2019 and give them all their forms and packages, but if their hire date is 1/1/2020 or later, you must already give them a 2020 form to use. That's one group of workers. The second group of workers who must submit the new form are those who want to make any change to their withholding. So let's say you have an employee who has a form on file with you since 2012, but now they want to change their marital status. They can't say, well, I'm grandfathered, I'm just going to use my simpler form. No, it doesn't work that way. They must use the 2020 for any change, which also note means that if an employee is claiming exemption from withholding, and as you know, exemptions expire every year, right, on February 16th, or this in 2020 will be February 17th. If they want to renew their exemption, they must use the new 2020 form. We're going to talk about exempts a little bit later, but anyone making a change must use the 2020 form. Now, that said, all employees, even ongoing employees, should be encouraged, not required, but encouraged to submit the new form. Why? For all the reasons we said before, in order that their withholding be more accurate, that they're not going to have to do a paycheck checkup, rush and do it at the end of 2020. No, do it right. Submit your form. Make sure that you're not going to get under withheld, especially if you have a multiple job household. To make sure you're not being under withheld, account for your multiple jobs, account for your other income, and make sure that you're doing it right so that you're not going to owe money and penalties at the end of the year. So they're not obligated to submit a new form, but they are encouraged to do so. Now let's go back to contrasting the form. So line 3 used to say, check here if you're either single, married, or married, but you want withheld at the higher single rate. Now, we still have marital statuses, but they've juggled them around a little bit. Single has now become single or married filing separately. So you're going to get questions from employees who are going to say, well, I'm married, and I used to check off married on the old form, so which one do I do here? Now I see, 2 marrieds. So if they're married filing jointly, of course, they're going to use the middle box over here, and that corresponds to the second box. If they were checking on their old form married, then and they want to have the same effect, they would check the second box on the new form, married filing jointly or qualifying widower. Don't let them get confused. Qualifying widower, it's an or. In other words, you still use this box even if you're not a qualifying widower. And here I want to give you another tip, which is about stepping over the line between advising your employees and becoming their tax advisors. If an employee comes to you with a technical question, here, I used to check off married. I want to get the same thing on my new form. What do I check off on the new form? That's just technical advice. So you can tell them, check off married filing jointly or qualifying widower. That's fine. But if an employee comes to you and says, well, I see there's a new status now, and there is a new status called head of household. How do I know if I'm a head of household? Well, here I would suggest as a best practice that you not go into defining IRS terms for them. I would suggest that you refer them to the instructions, which says, check this only if you're unmarried and pay more than full cost, et cetera, et cetera. Refer them to the IRS instructions. Don't become their CPA, don't become their H&R Block, don't become their tax advisor. And especially if they'll say, well, what should I put here under claim dependence, other adjustments? You can explain to them basically what the content of the form is. In other words, make sure that they understand technically what they're supposed to be putting down. But if they start asking you about their own tax scenario, that's the point where I would suggest that in order to reduce your own liability and not have employees come and, have complaints against you or perhaps even, liability claims against you later that you gave me misadvice, don't even go there. Just tell them, this is what it means on the form. And if you have questions about your own tax situation, refer that to your tax advisor. So we have the new marital statuses. If you used to check single, you would now check the first box. If you used to check married, you would check the second box. If you used to check the third box, married but withhold at a higher single rate, that goes back to the first box, single or married filing separately. That gives you the higher rate. And head of household, of course, is brand new. And if you look back with me a moment at the tax tables over here, you'll see there are now 3 statuses: married filing jointly, single or filing separately, and then the new one, HH, head of household. So again, you want to be checking with your payroll outsourcing partner or with your software. If you're using, customized software, or if you're using off-the-shelf software, make sure that the head of household status is now being supported, because on your 2020 W-4s, you'll be getting that from your employees. Then the next line of the old W-4, total number of allowances you're claiming, that's gone. That has vanished off the face of the W-4. It doesn't exist anymore. Allowances are gone. In their place, we have step 2, step 3, and step 4, which we'll talk about soon. And finally, at the end, line 6, we have additional amount, if any, you want withheld from each paycheck. That's still here. You see that? Step 4, line C, extra withholding. And actually, the IRS has accepted a suggestion that the employment community has been asking for a while. They've changed the wording to make it better. It used to say you want withheld from each paycheck. And that kind of left it ambiguous. Well, what if an employee had 2 paychecks in one payroll run? Am I supposed to withhold the additional amount for both or not? So here they've made it very clear. Extra withholding means enter any additional amount you want withheld for each pay period. No matter how many checks you have. If you have 10 checks, you're only going to withhold that amount once in the pay period. So we're very happy that the IRS put that wording there. It's much clearer for employees and employers both. And then you notice here on the old form, you used to have the claim of exemption because I didn't a certification that last year I didn't have any liability and this year I don't expect to have any liability. That's gone. It's not here on the form at all. And later on the webinar, we're going to talk about what employees need to do if they want to be claiming exemption. At the bottom, we still have the under penalty of perjury declaration, although they shortened it. It used to say that I'm certifying that I examined the certificate, so they took that out. I guess they figured it was a little bit superfluous because obviously if an employee is certifying to its accuracy, they've examined it. And then at the bottom, we have employer-only information. Now here, the IRS a little bit, I believe, missed the target because they used to explain when does the employer need to fill out this section and when do they need to put in the first date of employment and its own federal ID number. And they've taken that explanation out. It's not in the instructions anywhere when an employer is supposed to complete this bottom part or not. It doesn't appear anywhere in the instructions, so we can only guess that they intend what it was before, which is only if you send this form to the IRS. Sometimes the IRS tells you must send W-4s to them. So if you do, then you need to complete this bottom part. Or if you use this form for your state new hire filings, some states will accept a copy of the W-4 for new hire filings, and then you would need to sign. Otherwise, employers do not need to complete the bottom employers only section. Before we zoom in now and go step by step through the new form, I just want to point out that the W-4 SP has been released. We were waiting for the IRS to come out with that, and they indeed have. This may be used for Spanish-speaking employees. It contains all the same information as the English W-4, just translated, and it incorporates all the new changes as well. So this is available on the IRS website. It's called the W-4 SP. In contrast, the W-4P, which is the form some of you may be familiar with for withholding on pension distributions, if you're paying out to your former retired employees distributions from their pensions or annuities, they would be submitting to you the W-4P. And the final form is not yet out. This is a draft as of December 3rd. And what the IRS has said, actually this draft was on December 13th, and the IRS has not changed anything. And this is why I said before that allowances are almost gone, but not totally. W-4P still has the total number of allowances on it. We're not the final one is not in yet, but we're not expecting the IRS to actually modify this. We're expecting them to keep it as it is. And so at least for 2020, W-4P pension distributions will still be based on number of allowances in terms of withholding. So that's just an interesting twist there. Now, let's take an in-depth look at what this new form means to you. And again, those of you who have your own software and are dealing with it on your own, what changes you need to be aware of. Those of you who are working with partners, you want to make sure and verify that they are ready, and if they can show you their screens and how to manage it and how to do the data entry, that would put you one step ahead of the game. So the beginning is step one. This is a required step. All employees must complete step one. If an employee does not complete step one, the W-4 is invalid, and the IRS instructions are to withhold as though there is no W-4, which means single with no adjustments, right? They used to say withhold at single and zero, but there is no single and zero anymore. It means single with no adjustments. Step one is required, and step 5 is required. That was just the signature, the certification under penalty of perjury. No other steps are required. Steps 2 and 3 and 4 are totally optional to the employee. As always, though, we have the classic conflict, the classic trade-off between accuracy and complexity. The more information that the employee enters, the more complex they make it for themselves, the more accurate the withholding is going to be, and the less likely that they're going to have to pay penalties for under withholding, or conversely, get huge refunds and get too much money back that they could have used throughout the year. So again, the IRS has tried to strike a balance between complexity and accuracy and privacy, for that matter. In other words, not all employees want to disclose all this information to their employers, understandably. And in my opinion, the IRS has done an excellent job of striking that balance. So it needs to be clear to employees that they don't have to complete steps 2, 3, and 4, but they are encouraged to in order to get themselves the most accurate withholding and avoid potential penalties. Let's take a look now at step 2. Step 2 says multiple jobs, meaning if there is more than one job in the household, like the spouse works, or you yourself, you employee who are completing the form, are working more than one job simultaneously. And they're asking you to account for multiple jobs. And let's just put on our bookkeeping and our accounting caps for a minute and think why that's necessary. When you file a household tax return, you get one standard deduction per household. However, the standard deductions are built into the withholding tables. So every employee who works and gets their tax withheld by IRS withholding tables, publication 15, circular E tables, is having that standard deduction taken into consideration for them. So if you have 2 people in the household working, it's as though they're getting 2 standard deductions, which means at the end of the year, they're going to owe extra money if they do nothing, because they both got credit, they both got withheld less because of that same standard deduction, and they're almost for sure going to be under withheld at the end of the year. So in order to avoid that, employees need to complete step 2. And the IRS tells you, complete it if either you hold more than one job at a time, or you're married filing jointly and your spouse is also working, because your correct withholding is going to depend on the totals of all your household income. And if you don't want to be under withheld, we need to increase your withholding in order to account for that standard deduction. So the IRS gives you 3 options, and they are mutually exclusive. If you do A, you don't do B, and if you do C, you don't do B. You only pick one, and each employee can pick whichever one works better for themselves. The first one goes back to that estimator that I gave you a link for earlier up, and it says, use the estimator at www.irs.gov for the most accurate withholding for this step. This option, option A, is not only the most accurate, it's also the most private. It means that employees do not need to disclose to their employer that they're working a second job. This could be very attractive for employees. They don't need to disclose to their employer that their spouse is working. All they need to do is go online, go to this estimator, and like I said, the IRS has made it easier to use, and they'll be asked certain questions, and the bottom line, what will they get on that estimator? They'll get an additional amount to put into step 4. Remember, we saw there's an additional amount per payroll to withhold? Well, if they use the estimator, they will be given an additional amount per pay period to put there on their form, and the employer doesn't have to know why. They want additional tax withheld. Maybe they have an extra job, maybe their spouse works, maybe they have whatever reason. It's not nobody's business, nobody has to know. This option A is both the most private and the most accurate. What about employees who don't have online access or find the estimator confusing or don't really want to enter their personal information on an internet page? For whatever reason, people may not want to use the estimator. So then the IRS gives them option B, which is the second most accurate, or the way the IRS puts it, it's the roughly accurate method. Again, it's pretty private. You don't have to tell your employer that you have more than one job or that you have a spouse working or anything like that. You get to use something called the multiple jobs worksheet on page 3 of the form. Let's see how that would work. Here's the multiple job chart, and it comes along with a worksheet. Page 2, there's a worksheet. Page 3, there's a chart. It's supposed to be a little bit simpler than using the estimator. Some people may find it more confusing. What the IRS is telling you, first of all, find your status. Are you married, single, head of household? Second of all, take the higher job, let's assume there's 2 jobs, and find the income range. Take the lower job, find the range, and at the intersection of those 2 amounts, that is the additional amount for the year that you want withheld, and then just divide that by your number of pay. You'll do it, there's a worksheet that instructs you exactly how to divide it up, but you're going to divide that by the number of your pay periods, and you're just going to put that amount down on your W-4 as an additional withholding. And again, your employer doesn't have to know why or wherefore. You're requesting additional withholding because that's what you've decided, that's what your accountant told you for whatever reason, nobody's business. What if there's more than one job? What if you have 3 jobs in the family? So, and then it gets even more lovely and complicated. The IRS says, okay, first take the 2 highest paying and do this process for the 2 highest paying. Then add the 2 higher paying jobs and find their amount down this side. And then use the third one, the lower paying, across the top. Find a second intersection number. Add those 2 numbers together, the one from now and the one that I just found from the 2 highest paying jobs before. And that's the amount that I'm going to divide up by your number of pay periods. So it's a little tricky. It is more, in my opinion, it's more complicated than the estimator. You have to do these, if you have more than one job and combine them and do the, iterate through the process twice, but it still protects the employee's privacy and they don't need to use the estimator. So that's the second option. Let's say the employee doesn't want to bother with the estimator, doesn't want to deal with the multiple job worksheet. They want the simplest, I don't want to have to, be busy with it. I don't care. I don't mind, if there's no other choice, I don't mind if my employer knows that we have 2 jobs in the family, in the household. So I'm going to choose option C. Well, option C is limited in its effectiveness. First of all, it's only if there are 2 jobs and 2 jobs total. No more than 2 jobs. Then you may check the magic box, the multiple jobs box. That's what we called before the magic box in step 2. And the spouse, or if it's your other job, on your W-4 for your other job, check this box as well. Both of them are supposed to check the box. It means spouses have to talk to each other. They have to coordinate things. And this only works if jobs have roughly similar pay. Otherwise, you may actually be over withheld, which is, a half a problem, as we say. It may not be the end of the world. You'll be over withheld, but at least you won't be under withheld. If you use this option, you're almost guaranteed not to be under withheld. But again, it only works if you have 2 jobs and if they're roughly similar pay. What does this magic box do? Like, you check the box, so what happens? Well, that box is a signal to us, to the employers, to the payroll services, to use the higher tables. Let's scroll all the way back there. Remember these, the percentage measure tables? Use this if the Form W-4 is a 2020 form and the magic box in step 2 is checked. And if you look at these tables and you do the math, you'll see that it's higher withholding. What this says is, since there are 2 jobs, we're going to do higher withholding for both jobs because we're instructing the employees to check the box for both jobs. Now, here's an interesting tip. What if an employee wants additional withholding for whatever reason, their own financial circumstances, even though they only work one job? They don't have multiple jobs. Are they allowed to use this box to signal their employer to do higher withholding? And the answer is yes. The IRS has made it clear that an employee may check this box even if he does not have a multiple job, just if he or she wants additional withholding. You may still use this box. Now, it's a little confusing here because step 2 is done for both jobs. You're checking off this box for both jobs. However, steps 3 and 4, and the IRS tries to clarify that to you, should only be done for one of those jobs. Leave these steps blank for the other jobs, and it will be most accurate if you do it on the W-4 for the highest paying job. So let's say if a wife has a higher paying job than her husband, they would both check this box, but only on the wife's W-4 would she complete steps 3, the dependents, and step 4, which is the other adjustments, which we'll see soon. So it gets a little tricky there. Another point that may be tricky is that let's say you've chosen the first step to use the estimator to calculate the amount, and you figure out the additional amount that's supposed to be withheld. The additional amount goes only on one of the W-4s, not on both of them. Okay, so even though they're telling you if you're using option C, check the box on both jobs, but if you're using either A or B, the additional withholding goes on only one job. Now let's just analyze this a minute. And again, at Viventium, what we try to do is try to give you insight, not just facts. Put yourself in the employee's shoes. What does this mean for a minute? This means that let's say the employee has used the estimator, has figured out an additional amount. Let's say it's the husband's W-4 and he's put it down on his step 4 additional amount. Now let's say the wife experiences a change in her income or her employment. So they go back to the drawing board, they use the estimator again, they figure out who changes the withholding. On which W-4 is the withholding supposed to be changed? On the W-4 of the husband, the higher paying job in this example, because that was the one the W-4 that the step 4 adjustment was put into, which means you as employers may be seeing many more changes to W-4s during the year. I mean, you know yourselves, how often do your employees submit new W-4s? Maybe more often, maybe less often. Expect an increase in new W-4s being submitted mid-year and changes, because now even if just a spouse or a second job for the same employee changes, but if they're doing their adjustments on your W-4, so to speak, the W-4 they've given you, then they're going to make the change, even though no change has happened to their employment with you. Just wanted to make that clear. Okay, so let's say, fine, we've now gotten additional withholding because of the multiple jobs. Now we're going to move into step 3. And step 3 says, if you're entitled to a child tax credit, you know, the TCJA increased child tax credit to $2,000 per qualifying child, and it also created something called a $500 credit for other dependents. Those are those dependents who don't qualify as qualifying children, but they still qualify under other categories. You can claim then take the number of those credits, number of the children or other dependents, multiply by the appropriate amounts, put the numbers on the left-hand side, total them, and put them on line 3. And these are annual amounts, not pay period amounts. Now, a caution here. The total of line 3 does not have to equal the total of these 2 sublines on the left. So if you get a W-4 from your employee and the total is higher, that's okay. That does not disqualify the W-4. It's still a valid W-4. Why might it be higher? Because if you look in the instructions, the IRS has instructed employees, if you had any other tax credits, or at least you expect them, such as foreign tax credit, such as education credit. There are other credits on the tax return. Add them in also. Don't write them here on these lines on the left, but after you've written the lines on the left, you can also add additional credits and kind of, you know, hidden. You don't see them anywhere, but you can put the total on line 3. So don't be alarmed. This is again a tip. Don't be alarmed. You don't have to create a system validation or anything. If the form that was submitted to you, the dependent claims, it really should have been called claim credits. If I were writing it, I would have named it claim credits, but the IRS called it claim dependents. But it's not just for dependents. It's for any type of tax credit that the employee expects to have for 2020. They are allowed to enter it on line 3. I'll ask you a different question though. What if an employee put down amounts here for qualifying children, for other dependents, right? And they didn't total it and put it on line 3. So you get a W-4 where line 3 is blank, but there are amounts on the left-hand side. Which amounts are you supposed to honor? What are you supposed to do? So actually the IRS is undecided. They don't tell you what to do. They just say, just consider asking employees to review their form and check if it's accurate. Okay, so that's something I'm not going to decide for you, but the IRS advises you to consider asking your employee if the line has been left blank intentionally. That's what the IRS says. Now let's slow down a minute and let's just think. What's going to happen if an employee puts an amount on line 3? We know what's going to happen in step 2. Step 2, one way or another, we're going to be increasing withholding. Either the employee is going to tell you, using method A or method B, the amount of the withholding to increase for, or the employee is just going to check this box and your payroll system is going to have to do additional withholding. What's going to happen if an employee puts an amount on line 3? The answer is it will reduce withholding. Your payroll system has to be programmed following IRS instructions in publication 15T. It will reduce withholding, and of course with NTM handles this for our clients automatically, because it's a credit. Employees will have less withheld, which means their net paycheck will be higher, and their potential refund at the end of the tax year will be lower. Really what the law intended. Let's continue the form now. We're moving down to step 4. Step 4, the IRS actually wrote the word optional here. I really don't know why they only put the word optional on step 4, because they say up above that steps 2, 3, and 4 are all optional. I think personally the reason they put it there is because step 4 is the one that is most likely to upset your employees. Because look at the first thing, the first sub A, other income not from jobs. If you want taxes for other income you expect this year, such as your bank account interest, such as stock dividends, such as retirement income, right? Put down the amount of that other income, tell it to your employer. Well, you know, I think employees may see this and they may run fast in the other direction. So I think that is why the IRS actually decided to put the word optional to stress to everyone, to underscore that you don't have to put this information down. It can help you get more accurate withholding, but you don't have to disclose it. Now let's be very clear. Step 4A is other income not from jobs. We took care of jobs already in step 2. That was the multiple jobs. This would be other types, what we would usually call unearned income. And you can have withholding done in other ways. You can ask your bank, ask your stockbroker, you know, you can do the estimated tax payments, or you can do withholding when you receive the stock and dividends and interest, capital gain, whatever it might be. You don't have to put it here. You can only you only would put it here is if you don't want to be bothered doing withholding in any other way. You don't want to make estimated tax payments. You don't want them to withhold it at the source from your interest, you know, fine. So you want to do it through payroll. That's your choice. Just put the amount of your estimated other income. And again, this is an annual amount. Put it here and it'll be taken into consideration. Same thing about deductions. If you expect any deductions like let's say you're going to itemize your deduction. You're not going to use standard deduction. Or you're going to have other deductions, you know, not itemized deductions, but there may be other deductions on your tax return that you want taken into consideration. Well, the IRS gives you a worksheet called the deductions worksheet. And here you put an estimate of your itemized deductions as well as other deductions. And you add them up. Well, first, actually, you're just going to put your itemized deductions, then you're going to subtract out the standard deduction. Why are we subtracting out the standard deduction? Because remember, those are built into the withholding table. So you've already gotten credit for those. And if there's any excess of your itemized over the standard, which was already given to you, Then you can also add in other deductions, non-itemized deductions. That could include student loan interest, your deductible IRA contributions. You would put those on line 4, and the total deductions goes on line 5, and then flows through back up here in line 4B. Now, the 4A and the 4B move in opposite directions, meaning any amount put in 4A is going to increase your withholding, because you have more income, is going to decrease your net paycheck, and it will increase your potential refund. Line 4B, on the other hand, which is deductions, it'll decrease the withholding, increase the paycheck, and thereby reduce potential refunds. And then we come to line 4C, which we've spoken about before, and this is any additional tax you want withheld. And we really beg the IRS not to do this, because I'm sure employees are going to make mistakes. And again, this is a big red flag, just a tip for you to watch out for. This is the only amount of all these adjustments that is per pay period, right? Up above, the dependent credits were annual. Other income is annual. Deductions are annual amounts. But line C suddenly becomes a per, they did bold it at least, a per pay period amount. And therefore, if you get a W-4 that has like a very large amount, I don't know, $10,000 on line 4C, you may want to consider, again, asking the employee if that is indeed their intention, or if they missed it and if they just put in the annual amount. So that's a good, red flag to keep your eyes on. What about if an employee did not give in a new W-4? And I had this question come up as people were asking this. What if an employee is still grandfathered under their old 2019 form? What are you supposed to do now? Like, how do you figure out there's no withholding deductions anymore, withholding allowances? What do you do? So the IRS has said, at least they've issued a draft. We don't know if this is the final number, but they've said, for now, use 4,200 times the number of allowances. And, since we're a little short on time, I'm not going to actually work through this example with you, but you can review it in your slides. Basically, you annualize the wage, you still use the number that they're claiming, whatever that number is, times 4,200, subtract that out to get your adjusted wage. And then remember, you have the two tables over here. You're going to use the left-hand table. Use these if the form is from 2019 or earlier. And then you find the bracket and you calculate the tax. So this is the method if it's still an old 2019 W-4. Now, as I mentioned before, what are we going to do about an exemption? Let's say someone wants to claim exemption from withholding. Well, the IRS has taken it off the face of the form, but they've still allowed employees to claim exemption. And they've said, just take a pencil or a pen or a typewriter and put the word exempt, just like that, write it in the empty space under line 4C. And by doing so, you will be certifying that you didn't have liability last year, and you don't estimate to have it this coming year. You don't anticipate having it this coming year, and you must still review every year, renew it every year. So again, those of your exempt people who are claiming exempt in 2019 need to give you a 2020 form by February 17th. And those who give you a 2020 exempt form need to give you a new one by February 16th, 2021. Those of you who are using electronic W-4 systems to capture information electronically, you must provide a field for exemption, and you must also spell out the criteria for exemption. It has to say, by checking this box, you are certifying that you had no federal income tax liability in 2019, and you expect to have no federal income tax liability in 2020. What if you hire someone in 2020 and they don't submit a W-4? There's no single and zero anymore, as I mentioned. You're just going to withhold them as single with no adjustments. For those of you who have NRAs on your payroll, we don't have the final numbers yet. The IRS has only issued a draft, but they're, again, doing a two-pronged system. If it's a pre-2020 W-4, you're going to use one set of additional amounts. And if it's a post-2020 W-4, we're waiting for the final numbers, but so far this is the draft of the numbers that you're going to add on. And this is a draft as of November 4th, actually. The IRS has not yet specified where on the form they should write NRA. We're going to assume that it's going to be the same as before, and they can just write it across the top of the form that they are a non-resident alien. And before I turn this over to Malka to actually show you how this will work in the Viventium system, and you can actually go in, those of you who are clients, and see it yourselves, I want to underscore that Viventium has been following closely the IRS developments. Our online tooltips really enhance your user experience. When you go into the system and you hover over a field, it will explain to you what this new field means and how it's used. Our client service teams are all trained and ready and waiting to answer your questions, your employees' questions. And we have our subject matter experts as well that are available to provide insight. Our system had so much flexibility that I have to say our transition was so smooth and simple to this, like we weren't overwhelmed by this, and we were able to just easily move into this 2020 mode. And we also participated, I put a copy here of the letter that we submitted to the IRS. We were actually very gratified that during the comment period, when the IRS was inviting comments on its drafts, we actually did submit from Viventium a bunch of comments, and 2 of them were implemented and incorporated in the final form. So again, we really want to kudos to the IRS there for really taking comments of the industry stakeholders into consideration. And now I'd like to turn over to Malka, who's actually going to show you live in real time how all of this works in Viventium.
Thanks, Yonina. So as Yonina mentioned, the Viventium user interface is now ready to go. So any of you who are Viventium clients, you can go in yourself and see this. And if you have 2020 hires, it's now ready for you to input their data on their 2020 Form W-4. So in front of you is the taxes page for a new hire. And as you can see right here in the middle, there's a checkbox for the 2020 W-4. So if you have a 2020 hire or you have an employee who wants to change information on their W-4 on or after January 1st, 2020, then they should be submitting a 2020 form, and this checkbox should be selected. And what it does when you select that checkbox is that it opens up all these new fields, and I'm going to just go through the fields to show you how they correspond to the new Form W-4. Okay, so if you recall, step 2 was that multiple jobs checkbox. So if you have more than one job or your spouse works, the employee is going to check off that box in step 2. And then in Viventium, what you would do is simply just check off the multiple jobs checkbox in the user interface. And step 3 is where employees can claim dependent or other credits. So if an employee entered anything on line 3, that amount would follow over to the dependent credit field in Viventium. And again, this is an annual amount, and you would enter that in there. And then on line 4A is where there's other income, not from your jobs. And if an employee decides to disclose this and write it on 4A, then that would go into the other income field in Viventium. And then line 4B, we have the deductions. So if an employee has deductions beyond the standard deduction that they fill in on line 4B, that would go in the deductions field in Viventium. Again, an annual amount. And then the last line here is line 4C, which is extra withholding that an employee might want withheld from their paycheck. And again, this is a per pay period amount, not an annual amount like all the other fields. So if an employee does the calculation, decides they want more withholding on each paycheck, they would enter that in line 4C, and that would go into the additional withholding field in Viventium. And lastly, if an employee writes exempt in that space at the bottom of step 4, meaning they didn't have any withholding liability in the previous year and they don't expect to in the coming year, then you would check the don't calculate checkbox in Viventium. Now, I just want to point out this is different than the exempt option, which you see on the upper right-hand side of the page. Exempt is if an employee's wages are exempt from federal withholding, meaning they're not going to be reported in box 1 of the W-2, When an employee writes exempt on their W-4, that's not what they mean. What they mean is that they do want their wages reported in box 1. They are federal taxable wages. It's just they don't expect to owe any taxes, so nothing should be withheld. And then you would simply just save the information. You can see here there's a summary of an employee with their new W-4 for 2020. They have their dependent credits in there. They selected the multiple jobs checkbox. And of course, if this employee ever wants to make any changes and submits a new 2020 W-4, then the employer can just simply come here and edit their information. So that's a quick look of our new user interface. And I'm going to send this back to Yonina to wrap things up.
Thank you so much, Malka. And we are out of time. And so unfortunately, we won't actually, I know there's been a lot of question and answer interest peaked. We will be having a repeat session in January of this webinar. I just want to end with a few web resources that I believe that will be helpful. Here you have a link to the federal W-4, the final form, the 15T, which are the withholding tables. They're still in draft, even though the final withholding tables were issued on the IRS website. They have not yet issued the final publication 15T. And the frequently asked questions, as well as Viventium resources, our blog, which gives an in-depth explanation and analysis of the new changes, a video that summarizes the changes, as well as a podcast for your listening pleasure and further edification regarding the changes. Once again, I want to thank everyone for participating today. The webinar is recorded and will be available on the Viventium website. And I want to wish everyone much success in implementing the new taxes for 2020. Thank you all.